What's up, everyone? Michael Silva here to do an S&P 500 technical analysis update for May 18th. You might be wondering, what are all these arrows on the screen? Well, I just wanted to talk about the effect on the market when vaccine news comes out around this current pandemic. If you look over here on April 28th, the next day it gapped way up by the 61% retracement level on April 29th. And this was news driven by Gilead coming out with positive information around a drug called remdesivir. Now, if we fast forward to today, May 18th, very similar area where it closed. If you look at right here and right here, very similar area, which, could be just a coincidence, but a big gap up on relatively low volume. I don't have the volume up on the chart as of right now, but if you look at it for yourself, you will notice that it was on relatively small volume, this big gap up. And it was news driven around Moderna coming out with positive news around their vaccine trials, saying that with their small trial of about 45 people, some of them are now building up antibodies. And you could look up that article yourself, or I'll post a link in the description with more info on that. But as you can see, it started pushing higher and higher and closed actually above the 61% retracement level. And interestingly enough, as the market closed, there was an article by CNBC that posted very shortly thereafter saying that President Trump has been taking hydroxychloroquine for several days to prevent coronavirus infection. Not too sure what the motive is by letting that kind of information out, but from the looks of it, when there is information, positive stuff around the vaccine, you see the market react positively. Over the weekend, we also had the 60 minutes from the Fed. Let me play an interesting clip right now for you on that.
Simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we as a central bank, we have the ability to create money digitally, and we do that by buying treasury bills or bonds or other government guaranteed securities, and that actually increases the money supply. We also print actual currency, and we distribute that through the Federal Reserve banks.
So he came out, talked about printing money, and he also mentioned that there's really no limit and they're nowhere near running out. The M2 monetary aggregate, it's increased by $2.1 trillion. That's 13.41% in just the past 8 weeks alone. That's a year-over-year growth rate of 21.64%, which is obviously significantly higher than the record looking back at the chart in the early 80s. I think that's 1983. So I thought this would be interesting to show you, and then I want to overlay this money flow with the S&P 500 so you can get a good idea of if the market tracks it or not. So here is a chart of the flow of money. I saw this on Twitter and found it very interesting, but the white line is the global M2 money supply, and then the S&P 500 is the blue line, and this dates back to the 2007 range. And as you can see, the S&P 500 took that big hit, and then we see the money, then we see the global M2 money supply increase. And as you can see with the overlay of this chart, they move hand in hand very similarly together. And what you're seeing here is this, in the previous right here in the 2018-2019 range bound, when the S&P 500 took a dip, you still see the M2 money supply heading upwards, and then eventually the S&P 5 catching up to it, and you still see here this big dip. So will we be seeing the S&P 500 match back up and catch to the M2 money supply on this chart, which a lot of people have been talking about, a potential of a market melt up? And what a market melt up is, it's basically when you just have an exaggerated amount of people driven by fear of missing out come into the markets because they don't want to miss out, and all that money and all that stuff coming in, despite all the fundamental difficulties that the economy is facing, push the market up to new highs. All right, so we are back at the daily time frame to do the SP500 technical analysis update, to walk you through what I see and what I kind of think will be happening. Now, from a purely technical side, this is a very bullish move, a big gap up. However, this was done on relatively low volume comparatively to the previous days. So I feel like this big gap up, and with the news that came out around the vaccine from Moderna, I think this is fully really just kind of emotional based kind of jump up, and it's running kind of right into this area of resistance by the 3,000 and the 3,000 to 3,100 range right here. That there's so much resistance right there. Okay, there's a fortress of bears hanging out, saying like, "Good luck trying to get through us," sort of thing. So I think my narrative will really change from more bearish to bullish if we do get a break above that. And then I'd start be saying something like, okay, this could be just a fear-driven market rally, which is really fear and Fed-driven market rally, I should add, to make potentially this market melt up to potentially see a new high. Ultimately, though, at that point, I still think the fundamentals from the market are going to catch up and we will see the downfall. It's what happens during bear market rallies. So there's so much uncertainty out there, very unclear as to what we can see. And because the fundamentals and stuff don't quite match up, unless if it's emotionally driven, all we have to really look at is these technicals. And I say that often. As of what I see in the markets, I'm not going to be holding any trades overnight because if I do, it's going to be so small of a position size because I don't want to get trapped up in anything. And this market is just Gap City, it moves, crazy movements, and it's too unpredictable at this point in time. But from what I see, it's this resistance area right here, 3,000 to 3,100 is going to be the wall to hit. Now, because of the low volume on this gap up, and then I also noticed on the tape at the close of today that there was some pretty big orders that came out. So I think that we might actually, I don't know necessarily if this is going to hold above the 61% retracement level. So it's going to be interesting to see how this plays out in the futures market overnight and also opening bell to see where we go. So that is on the daily time frame. I want to just scoot over to the weekly time frame because I mentioned this on yesterday's video that I was starting to notice this little tiny trend here from the low wicks. It kind of moves up like that. And the MACD was looking kind of bullish crossover right here. It's still below zero, but as you can see, it did pop into the green, and we see the spread starting to take place. Obviously, anything could happen at this point in time, but it's already a really good positive start to the week. And these long lower wicks really make me think that, like, hey, there's some bulls here that are really sitting around this range, pretty much a 50% retracement level, that are just like pushing this market up. And with the news that comes out around these drugs, this positive news, which, by the way, the positive news, I think it's overvalued because it was a small trial. We're talking 45 people, I think it was, and they were starting to show signs of antibodies, and it was, phase 1. Who knows how many phases there are? Everything in this economy now is apparently about phases. We have the phases in the trade deals, the phases around vaccines, everything's a phase. So it's still like a news-driven market and FOMO-driven market and Fed-driven market. So what can happen? Well, I guess from right now at this particular point in time, I'm still bearish unless we get the close above this big resistance zone right here, this 3,000, 3,100. Then my view might change. But as of right now, I still think that this can head and will head lower. And even if it goes higher, the fundamentals are still horrible, okay? You have job losses that are in, I think it was 33 million unemployed or 36 million unemployed. That is going to have a dramatic effect on the economy. And yes, the stock market is different from the economy, but also when you look at what is driving the markets higher, it's like a very specific amount of stocks, like a very small amount that are pushing the market higher. And like the Nasdaq, for example, like it's the FANG. It's you got Facebook, Apple, Google, and like these big tech stocks are really pushing, and Amazon, pushing the markets higher. And yet a lot of the other stocks are just getting crushed. That's all I have for you on the S&P 500 technical analysis update for today. Hope this helps you guys out, and I'll be back tomorrow to give you any news that comes up. See ya. Now, people have been wondering where Coco has been. So for those that stick around to the very end, here's Coco. She wanted to say hi to all the fans and all the subscribers. Thank you for watching. Say thank you. She's too chill. Chill as a cucumber. All right, bye.